Well, it was another nice day on Wall Street. In fact, the last hour or so, we saw a nice shot in the arm as news started to come out that President Trump and some key European officials were going to have a joint press conference, kind of giving the expectation that a possible resolution with some of the trade tariffs was going to be achieved. So we'll see what that brings. But we did just learn here moments ago that Facebook came out with their earnings, and of course one of the 5 largest companies in the United States, very impactful on the markets. They came out and their number was really soft, and that stock is falling pretty precipitously in the after hours session. So we'll take a look at that. We'll take a look at the dollar and how that's kind of affecting some foreign instruments out there. And then we do want to take a look at a trade application example today from the technology space. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 25th, 2018. If you're new, first of all, welcome aboard. We're grateful to have you in our audience here tonight. Remember, you can subscribe to our YouTube channel and also check out our description area that'll allow you to sign up for our email distribution list, so that way you can be notified whenever we post these videos on a nightly basis. In addition to that, we also give you the heads up on the stocks that are giving you overbought and oversold cluster signals within the S&P 500. David and I are also heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee, all one word. You can follow the Market Scholars handle at market_scholars. Remember, we provide our trading insight throughout the day there, so we would encourage you to follow along. And lastly, we are on Facebook, speaking of which. We have a group there, so feel free to check out that web address in the logo in front of you and join our ever-growing group of excellent investors in Facebook. So let's go ahead and get started here with our analysis today. You can see I've got the key US indices pulled up in front of us, and it was a really nice day across the board. As you can see here, the S&P 500 was up 0.91%, yet another multi-month high. I mentioned that yesterday we were hitting multi-month highs, and we were talking about that candle looking like potentially a doji, which can be a reversal signal. But remember, you need the next day to confirm whether that actually was a doji or not. In this case, it was a continuation, and so that nullifies that possibility here. And the bulls are running wild here at this point. That was one of the nicest looking candles here today that we've seen on the entire chart. And again, we're not to all-time highs yet, but we're inching ever so closely to them on that key S&P 500. Of course, we retain our bullish posture on the S&P 500, just like we've had going all the way back here since July 5th. On the Dow Jones, we were up 0.68%. Another really nice looking candle right there, one of the best on the board. In fact, this helps nullify some of the concerns I mentioned yesterday as well when I said we were kind of bumping up against some prior resistance levels. Look where we are at now on the Dow Jones. That was enough of a move higher there to get us up and through, in fact, closing above that prior resistance area. So that's another strong sign there. Moving on down here to the NASDAQ, notice that the NASDAQ was up over 1%. Now again, with Facebook coming out after hours tonight, last I looked, their stock was down about 9%. And so that will likely pressure the NASDAQ tomorrow. But for right now, what we do know factually with today's closing prices set, this was another all-time high that was established today on the NASDAQ composite. In fact, we closed at a new closing high, not just an intraday basis. And so that's a strong sign there as well. We retain our bullish posture there ever since July 5th on that one as well. Remember that the Dow Jones had one day of a weekly bearish posture there, but we've already reverted back to bullishness, so that didn't last long. Now, speaking of one-day posture changes, that's possibly what we'll have set up here with the Russell 2000. Notice in the lower right-hand corner here, Russell 2000 was up today, but again, it was a laggard. Remember, yesterday it was a little suspicious that that one was struggling as much as it was compared to the other indices. Today, it continued to lag. And again, that's not necessarily the strongest sign out there. Typically, you want that Russell 2000 to be more of a leadership category. Right now, it's just deciding to drag its feet a little bit. It was up 0.3% today, so that was good, and it closed at its highs, but you will notice it wasn't enough of a bounce to kind of hold off that bearish posture that's starting to set in here. Now that's a weekly bearish posture, and remember the way that that is being established is if you look at that green intermediate line on the market forecast indicator down below here, notice how it just popped just barely below 80 there, and you can read that right here if it's too tough for you to see with your eyes. The number says 79.39 and falling. So since it's below 80 at this point and falling, technically it is a weekly bearish posture, not a strongly bearish one, but a weekly bearish one. If it can bounce here in coming days, I have no doubt that that posture will flip back to bullish. So this is not go all in heavy on the bearish side of the equation type of a moment here. We still have key support levels that are holding. In fact, we're still above a moving average at this point on the Russell 2000. So it's just kind of dragging its feet. It's not making huge waves one direction or the other. Let's take a look at a few other charts here. In this case, let's go ahead and take a look at our intermarket analysis 12 grid. And as a reminder on these 12 grids here, when you're looking at the pink backgrounds, it's basically telling you that the particular security in question has a bearish posture. The green backgrounds are going to tell you that you have a bullish posture. And so it's kind of interesting the way that this intermarket analysis one is established here. Notice that we've got in the lower right-hand corner working its way up. Lower left-hand corner, working its way up to the upper right. You'll notice that we have all the pink ones. Now in the upper right-hand corner, working its way to the lower left, we have all the green ones. So kind of interesting how it shook out that way. But you will notice that we did have a few key movements here today. A lot of you do like to see what's going on with the VIX. So not a big day for the VIX, but just be aware that it dropped a little bit here today. We're still hovering near multi-month lows there. But the big moves that kind of caught my eye, first of all, take a look at Master Limited Partnerships. That was a big move right there. That's a huge candle. It's only a 1.8% move, but remember this is an index that tracks all Master Limited Partnerships. So for that entire kind of asset class or group to be up nearly 2%, that's a very strong move for it. In fact, we're at new closing 3-month highs for Master Limited Partnerships here. Also notice down below, crude oil was up over 1%. That's your chart in the lower right-hand corner. That's starting to establish a nice base there. We'll see where it takes us. This has been a very wild roller coaster type of a chart here over the last 3 months. But right now it looks like we kind of tried to establish our bottom and are about ready to start ripping higher here again. Notice that that will tie into our conversation about the dollar that I mentioned in the intro. Take a peek over here in the lower left-hand corner. That's your UUP. And we had a pretty significant breakdown in the dollar today. Notice that it was down about 0.5% on a big currency like the US dollar that trades, you know, billions upon billions of dollars worth of investment per day. That's significant. And so not only that, but it kind of broke down below that moving average as well. You'll recall that's one of the things that I was waiting to see if it would happen or not. Now that I'm starting to see that happen, it's becoming a little bit more concerning that the dollar is starting to break down. Now, I only say that if you're a long dollar proponent, right? Remember that many of you, whether you know it or not, would probably prefer to have the dollar be weak. I know that probably represents my posture in my own portfolio, not because I invest in a whole lot of foreign companies per se, but I do own a lot of multinational companies that do just as much business outside of the US than inside. And so that can actually help even some of those big US companies when the dollar starts to weaken a little bit. But remember that when the dollar gets weak, it also carries on over into the commodities oftentimes as well, because commodities are priced in dollars. And so notice that we've had a really, really tough go of things in the gold market and the agriculture commodities market here recently. They both had nice days today. Gold was up 0.5%, agriculture commodities up about 1.5%, and I already mentioned crude oil. So we are starting to see that kind of relationship hold true, where the weakening US dollar is starting to boost the appeal of some of those commodities. Let's now take a peek at what's going on with the foreign stock markets themselves, because remember again, when the US dollar weakens, a lot of those foreign investments start to look more appealing as well. And you'll notice that was the case here today. In fact, as I look at all 12 of these foreign stock markets on the board in front of us, every single one of them was positive here today. And even from a posture setting perspective, from the intermediate term, just beyond, not even just today alone, but beyond today, the only bearish posture that's left on the board is Russia. And I tell you what, if the US dollar keeps on falling and oil prices keep going up, I would assume that Russia, which appears to be in the midst of a nice bounce right here, could very well go to a bullish posture here before too long. strong. So this is a promising sign when we start seeing, resiliency in a lot of the equity markets around the globe. Again, we don't have a whole lot of outstanding looking charts because most of these are reversal types of charts. They're not continuation charts. One that I would point out that looks appealing is Israel. Take a look at Israel here down in the lower rung of charts, the second from the right. That's EIS, and that was a really nice looking candle here today, bouncing off that moving average, and we're approaching the breakout zone from where it was trading back here in mid-June. So keep your eye on EIS. That one looks kind of appealing at these levels as well. Let's take a look at what's going on in the United States now with the U.S. markets 12 grid. And so the same thing goes when you see the green charts here. It means that you have a bullish posture. And so the only bearish posture on the board from a sector's perspective here is telecom. AT&T was actually one of the worst performers in the market here today, so that's not a huge surprise to see that be the lagging sector right there. But for the most part, you look at those charts and they look pretty appetizing. You're seeing technology hitting new highs here. In fact, closing basically at all-time highs on XLK. Again, that's going to be affected in all likelihood overnight because of Facebook, but it sure is a strong sign going into today's close to close right there at all-time highs on technology. We also find that we had a nice bounce out of discretionary right here. Industrials had a big day despite Boeing disappointing a few people with their earnings announcement here in the last 24 hours. So the industrials are starting to look a little bit more lively. You'll notice that energy had a nice bounce above that moving average here. And you see healthcare. I mentioned yesterday that those major pharmaceutical companies were starting to look very appealing. Merck, Pfizer, Bristol Myers, Eli Lilly, all those types of companies. And while I anticipated maybe a little bit more of a follow-through type of a day, I wasn't expecting this. This was much more than I had anticipated. 1.28% on the entire XLV here today. Take a look at that candle in relationship to all those other candles on the board. It's one of the biggest in the last 3 months, right up there at the top. And of course, we closed at the highs of the session as well. So healthcare looking very, very strong. And that just reminds me as well, of course, one of the things that we talked about yesterday was my sector selector here, and showing how healthcare had been gaining steam for about 3 or 4 straight weeks. So I would anticipate when I put this graphic together again at the end of this week that healthcare will likely retain that #1 slot. Possibly technology will be up there, but we'll just have to see how things shake out here for the rest of the week with Facebook and some of the other key earnings that are coming out. But right now, healthcare is kind of the talk of the town. Other things that I wanted to point out now that I'm over on the internet here, be aware that that David and I now have a bit of a partnership with See It Market. For those of you that are familiar with that organization, they bring together a lot of key contributing writers across the investment community, and so we're honored to be featured on See It Market. I'm bringing it up today because I had my first article featured over there, so feel free to go to seeitmarket.com. Otherwise, if you follow me on Twitter, I do have it tweeted out here as well. It was on Hershey's, and my expectation that tomorrow morning Hershey will likely come out with a dividend increase, and how that can be important for our mindset when it comes to long-term investing. So if you're interested in that subject matter, I would encourage you to seek out that particular article there again on See It Market. And by the way, welcome to all of the See It Market fans out there that may have been stumbling into our various videos here recently as well. David and I are honored to go to work for you. And so the other thing that I would mention now that we're over here is that I typically try to retweet this graphic about earnings that are coming out. It can be helpful to kind of gauge what's going on in the after-hours sessions when we're doing these videos. And as you can see here, on Wednesday, we have a number of key names coming out: AMD, Facebook, Visa, PayPal, Qualcomm, Align Technology, Las Vegas Sands. There's a number of them there. So maybe it'd be useful for us to kind of take a gander at what's going on after hours. I mentioned Facebook already. It was down 9% when I first started recording the video. We'll see where it's at now. So let's go ahead and pop on over back to the Thinkorswim Paper Money platform here. And I'm going to take a look here at Facebook to start us off, and you can see that Facebook is down pretty dramatically. Notice that the bid-ask data right here is in real time. The last price over here is, of course, talking about the last price. Hang on, a last price of the normal market session. And so they closed at $217.50. They're now trading just a hair below $200. So maybe the market makers are trying to pin it exactly at 200. We'll see where that goes. But that is a negative sign, obviously. Again, Facebook, one of the most influential companies in the markets because of its market cap that it's grown to in recent years, becoming one of the 5 largest companies in the United States. And so that will have an impact on the markets in all likelihood tomorrow. But of course, there's a lot of other companies that could impact it the other way. I did happen to see that Qualcomm, when they released their earnings, they were up. Now, not as much, and again, they're not nearly as big as Facebook, and so it won't be equally kind of offset, but it can help a little bit when you get a few of these other companies that come out with positive earnings. So Qualcomm, you can see here, closed at 59.42. They're trading as we speak right now at about 61.30, somewhere in that neighborhood. So a couple dollars to the upside there. I'm not sure if Visa's out yet, but let's check in and see if they are. Looks like they are out with their earnings, and they are trading a little bit higher, but trading actually quite flat there. Remember that the market maker move right up here that you see on the Thinkorswim platform will generally give you an idea of the range expected out of a company through a key announcement like this. And so the range was about $4, and this thing right now is only trading about $1 higher. So kind of a muted, quieter response to earnings than many people were expecting out of Visa there. Others on the board, let's take a look at PayPal. That's become a more powerful company as the years have gone on. PayPal is struggling after hours. Notice that PayPal closed at about $91.37. It's trading now a hair below $89. So that one is struggling. Let's take a look at Align. It's a company we've been talking about a little bit more in my momentum-based classes here at Market Scholars. And that stock has just been an epic growth stock over the years. It came out with its earnings, and it appears the market has soured on them to a degree. This company closed the session here at 381.77. It's now trading a hair below 369. And so that's a pretty healthy haircut there on that particular stock. And let's take a look at Gilead now. Gilead, a big biotech company. They came out with earnings. It appears that they traded down a little bit as well. They closed at 78.92, down a little bit below 77 there. And then let's take a look at Las Vegas Sands as well, LVS. And let's take a peek at what they're doing. And you can see they're down a hair as well, although bouncing off of the lows in the after-hour session. They did tick all the way down to about 71.10 at the lowest levels. They're now trading back up there above 73.90 or so. It depends. You know, we have that wide bid-ask spread, so you got to be a little bit careful when you're looking at these after hours because the bid-ask spread can be so wide there. But point being, it's still down a couple bucks after hours. So if I had to kind of give it a report card as far as tonight's after-hour session, it's not necessarily an A+ across the board for our various companies out there, especially considering Facebook is the biggest on the board and they're one of the ones that's getting beat up the most. So let's just take a peek to see if that is affecting the market at all. You can see that the stock market is down a touch when you pull up SPY. Now, as I glance over toward CNBC, I see that President Trump is talking right now, so that very well could be impacting prices as well. But anyway, the SPY closed at 284.01, and it is down maybe about 50 cents or so after hours, probably again largely due to Facebook there. So anyway, that's your kind of your recap there in the after hours session. To get a sense of what sorts of stocks were moving big here today, let's go on over here to the Market Scholars 1000 all stocks list, and I just want us to take a gander at what sort of stocks were leading and lagging here today. Notice that Tupperware struggled mightily today, down 16%. Polaris was down 8%. MKSI, that was one of the stocks I actually mentioned in Monday's class where we were talking about it and comparing it to ASML, which is another key semiconductor equipment company. But anyway, MKSI down 8%. New York Community Bank Corp down nearly 8%. UMB Financial down 7%. Watsco down nearly 7%. So some big movers there. Again, that's earnings season for you. You're going to have big movers on both the up and the downside. On the upside, we did see FLIR Corporation. That was up 11%, nearly 12%. Corning, wow, look at that number out of Corning. Of course, the maker of Gorilla Glass and all kinds of fun glassware types of products, along with fiber optics and everything else, up 11% today. That's a massive move for that large of a company. HCA up 9%. Carlisle was up 8%. Robert Half was up 8%. And then one of the stocks that we own in my top-down trend trading class, Waste Management. In fact, it's our longest held position, up nearly 8% here today, kind of getting out of that funk that it was in for the last few months. So good to see it back on the upswing again. Rockwell Automation up about 7%, Banco Santander and Nectar also up 7% here today. All right, so that's your key recaps there on some of the big earnings movers here recently. Let's now dive into our trade application example for the day. So for that, I'm going to come back over to the charts. Let's go back over here to chart, let's see, 4A, let's do. And let's pull that up. You know, one thing that I was just thinking as well, let me come over here to chart 2A in this case, and I want to pull up Visa here. The reason I wanted to bring this up is I just wanted to remind you guys, we had that conversation just a moment ago about the MMM, the market maker move. So remember, for those of you that are premium market scholars and you've gone through my charting tutorial already, if you go to chart 2A, that can be a helpful band right there in yellow to kind of help you gauge where market makers expect a stock's price to move to on both the upside and the downside. Now, as we saw with Visa, the market makers don't have a crystal ball, but at least they're using legitimate data to kind of come to terms with that particular number that they're expecting. So don't forget about some of those key charts that you premium market scholars have access to behind the scenes there. But anyway, let's go over here back to chart 4A. And I'm going to take a peek here at a technology company, Take-Two Interactive. For those of you that love your video games, this is the company behind Grand Theft Auto and a couple of other key names out there. Of course, some of you might be hearing about all the rage when it comes to, I believe it's called Fortnite. Now, I'm not much of a gamer anymore. Used to be maybe a couple decades ago. These days, I just don't have the time for it. So I must admit, I don't know very much at all about Fortnite, other than I keep hearing people talk about it and know that it is a pop culture phenomenon. And so the video game space has been talked about in recent times as being potential acquisition targets. You know, we talk about all these media deals that are getting done, whether you're talking about, you know, Fox and Disney and Comcast, or whether you're talking about AT&T, Time Warner. I mean, there's a number of them that are out there, or at least rumored. And a lot of folks feel like the next level of acquisitions could very well come from the gaming space, because a big chunk of our society spends large swaths of their day playing video games, for better or for worse. And so that's where the eyeballs are, and they're more so there than they are even on cable TV sometimes. And so, you know, one of the companies that we have in our top-down trend trading portfolio is Amazon. That's kind of benefited from its ownership of Twitch, the channel that will allow you to kind of watch other people play video games. But let's not forget about the video game makers themselves, the software makers. Take-Two is one of the key ones, along with Activision Blizzard, which I know David's talked about a number of times in the past, and then Electronic Arts is another big one. But you can see here that Take-Two did tick to a new high here today. Didn't close exactly at the high, but closed in the upper half of its range. And that was after having a pretty poor day yesterday. So we retain our bullish posture on Take-Two. Now, Take-Two is a bit of a wild card through earnings, and they do have earnings coming up. But with volatility as low as it is right now, it can be a little bit difficult to make a go of things when you're a credit seller in the options world, because volatility is so low. And so one of the things that people can do if they want, I'm not suggesting that you do, but if you do decide to trade through a earnings announcement, you oftentimes will get juiced volatility because of that. And so if you're on the right side of the trade, that can be helpful. Now, that's a little bit of a gamble, so I want to be clear about that. You don't know how the stock market's going to react when a company announces their earnings. But again, going back to the concept of that implied volatility that is higher can help boost the credit that you receive when you're selling premium. So I'm not a big fan of selling puts naked through a earnings announcement, but if you sell a put spread through an earnings announcement on a high-flying stock like Take-Two, at least you know you kind of have a built-in hedge in case you're completely flat out wrong with what your analysis suggests. So again, you can see here we have a strongly bullish posture, a stock that is trying to break out to new highs here and isn't all that far away from its moving average currently. If we come over here to our trade tab, we pull up our monthly contracts here in August. Notice the implied volatility here is 44% versus 33% in the weeklies that'll expire here this week. So that tells us that they likely have earnings coming up here within the next couple of weeks. And again, that can help juice your returns. And so the spread that I was looking at was way down here at the 120. Now notice this is a stock that closed at 127.84. So if I come over here, right click on 120 and go to sell vertical, that will load up our 120, 119 bull put spread. It's a credit spread. In this case, you can see that it's going to give you about 23 cents. Now, when I was looking at this earlier today, it was at 24 cents, so it kind of slipped away a little bit there. But nonetheless, even a 23-cent credit on a $1 wide spread is right around that 30% return on risk that we typically are shooting for. So that's the trade that I was thinking about doing here. Now, remember, when you click on Confirm and Send, it will show you what your break-even price is going to be on that particular trade. In this case, it's $119.77. And so, you know, it's a good $8 per share lower than where the stock is currently trading, which opens up that possibility for you to be wrong a couple extra bucks. It gives you a couple extra bucks of cushion that you wouldn't have had otherwise. Remember, a lot of times we're looking at the 30 delta to sell. If we would have done that in this case, we'd be selling the 122 rather than the 120. And then we wouldn't have had that extra $2 worth of cushion there. So the reason that we're able to get that extra $2 of cushion is because implied volatility is so much higher right now because we have to take on that risk of trading through an earnings announcement. So a couple different things to think about there. We're going to keep it nice and light there. But as a reminder, where we look at on that chart for that break-even point would be a little bit below 120. So this stock would have to come back down, close below that moving average in order for this trade to fall into jeopardy. But I'm just going to do one contract here just to highlight the idea educationally and kind of remind you of what's going on when you're trading through an earnings announcement itself. So confirm and send, review this one last time. We'll ship that off and see if it gets filled. All right, well, I want to thank you for joining me here tonight. Always a pleasure to go to work for you. Again, David's out of the office this week, so I'll be doing these videos throughout the rest of the week as well. I do have a class coming up tonight, Strategy Lab, where I'm paper trading 50 different strategies against one another. So for those of you that are Premium Market Scholar subscribers, feel free to join me for that. And then tomorrow I have my question and answer class at noon Eastern time as well. So I look forward to seeing many of you there. But until I see you next, have a great rest of the day. Best of success with your trades and your investments. Goodbye for now.